There's a brand new tax break worth up to $6,000 per person, up to $12,000 for a married couple, and right now, most of the seniors who qualify for it are not getting the full benefit. Some don't know it exists. Some assume it's automatic. And here's the part that stings. The IRS will not add it to your return for you. If you already filed this year, there's a real chance you left this money sitting on the table. But here's the good news, you can still get it. If you're 65 or older, this could be the most valuable 10 minutes you spend this tax season. I'm going to show you exactly who qualifies, how much you can actually save, the income limit that trips people up, and how to claim it or reclaim it if you already filed and missed it. And I'll clear up the single biggest myth about this deduction, the one that has thousands of seniors completely confused about whether their Social Security is now tax-free. Before we start, if you'd rather keep your money than hand it to the IRS, subscribe and turn on the bell. This is the practical stuff that puts real dollars back in your pocket. All right, let's break it down. Let's start simple. As part of the big 2025 tax law, Congress created a brand new deduction just for older Americans, often called the senior bonus deduction. If you're 65 or older, you can knock an extra $6,000 off your taxable income. If you're married and both of you are 65 or older, that's $12,000. And this isn't a tiny write-off for a typical middle-income senior. That $6,000 can translate into somewhere around $700 back in your pocket. And for a couple, more, that's real grocery money. Every year it exists. And notice I said every year it exists, because here's the catch you need to circle. This deduction is temporary. It's only available for the 2025 through 2028 tax years. After your 2028 return, it disappears unless Congress renews it. So this isn't a someday thing, you have a limited window to claim it. Starting with the return you're filing right now. Which raises the obvious question. Do you actually qualify? Let me give you the exact rules, because a few of them surprise people. Here are the rules, and they're straightforward once someone lays them out. First, you must be 65 or older by the last day of the tax year. For your 2025 return, that means you were born on or before January 1, 1961. Turning 65 later in 2026 counts for next year's return. Not this one. Second, you need a valid Social Security number on the return. Third, your filing status matters. Single filers, heads of household, qualifying surviving spouses, and married couples filing jointly all qualify. Now here's the one that catches people. So listen closely. If you're married, you must file a joint return to claim this. Married filing separately does not qualify, period. No matter your situation. But here's a pleasant surprise on the flip side. You do not both need to be 65. The deduction is per qualifying person. So if you're 66 and your spouse is 62, you still claim your own $6,000 on that joint return. And when you both cross 65, it becomes $12,000. So don't assume a younger spouse disqualifies you, it doesn't. No, this next part is what makes this deduction genuinely special. And it's where most people underestimate it. Here's what makes this deduction different from almost every tax break that came before it. Normally in taxes, you have to choose. You either take the standard deduction or you itemize, but you don't get both. This new senior deduction breaks that rule. You get it whether you take the standard deduction or you itemize. You don't have to give anything up to claim it. And it gets better. because it stacks on top of a benefit you may already be getting. Seniors 65 and older already receive an extra standard deduction, around $2,000 for a single filer. This new $6,000 sits right on top of that. So let me show you what that adds up to. A single filer, 65 or older, taking the standard deduction for 2025, can stack the base standard deduction, plus the existing senior add-on, plus this new $6,000 for a total of around $23,700 shielded from tax. For a married couple where both are 65 and both take the standard deduction, the combined total climbs to roughly $45,000. That is a massive amount of income the IRS simply can't touch. But there's an income limit that can shrink or erase this. So let's make sure you're on the right side of it. Here's the one thing that decides how much you actually get: your income. The full deduction is available if your modified adjusted gross income, basically your total income for tax purposes, is at or below $75,000 as a single filer, or $150,000 for a married couple filing jointly. Below those numbers, you get the whole thing. Above them, it starts shrinking. For every dollar you go over the limit, the deduction drops by 6 cents. That's $60 for every $1,000 over. So a single filer with income of $100,000 is $25,000 over the line, which cuts the deduction by $1,500, leaving $4,500 instead of the full $6,000. And it phases out completely at $175,000 for singles, or $250,000 for couples. Here's the practical tip. If your income is hovering just above that threshold, this is worth a conversation with a tax preparer, because moves like timing a retirement withdrawal or a charitable distribution from your IRA can sometimes pull your income back under the line and rescue part of the deduction. Now, let me clear up the myth that's confusing more seniors than anything else about this. You've probably heard it said that the 2025 tax law made Social Security tax-free. Let me be straight with you, because getting this wrong could cost you at tax time. That is not quite true. The law did not eliminate taxes on Social Security benefits. What it actually did was create this $6,000 deduction, and that deduction is the real thing behind all the no tax on Social Security headlines. So what does it really do? It lowers your overall taxable income. And because the amount of your Social Security that gets taxed depends on your total income, lowering that income can, for some people, reduce how much of their Social Security ends up being taxed. That's a genuine benefit. But it is not the same as your Social Security suddenly being exempt. So don't skip reporting your benefits, and don't assume your tax bill is automatically zero. Understand it for what it is, a valuable deduction that lowers your taxable income, and you'll file correctly and confidently. Which brings us to the most important part: actually claiming it. Here's how you make sure you actually get this money. If you use tax software like TurboTax or HR Block, it will generally apply the deduction automatically, but only if you entered your correct date of birth. So double-check your final return before you submit, and look for that senior deduction. The IRS created a specific line for it, on a new schedule attached to the 1040. If you file a paper return, this is critical. The IRS will not add it for you. You have to claim it yourself. And here's the part I really don't want you to miss. If you already filed your 2025 return and you did not claim this deduction, maybe your preparer missed it. Maybe the birth date wasn't entered. You are not out of luck. You can file an amended return and get that money back. It's worth the small effort for hundreds of dollars returned to you. So whether you're filing now or fixing a return you already sent, the action is the same. Make sure that senior deduction is on there. Let's lock it inches. 1. There's a new deduction worth up to $6,000 per person. $12,000 for a couple. For tax years 2025 through 2028. 2. You qualify if you're 65 or older with a valid social security number, and if you're married. You must file jointly, though only one spouse needs to be 65 to claim their share. 3. It stacks, you get it whether you take the standard deduction or itemize, on top of your existing senior deduction. 4. It phases out above 75,000 single, 150,000 joint. And 5. The IRS won't add it for you. So claim it, and if you already filed and missed it, amend your return and get it back. The single most valuable thing you can do today. Pull out your latest tax return, or have whoever filed it check, and confirm that senior deduction is actually on there. One quick look could be worth hundreds of dollars. And since tax rules vary by situation, a few minutes with a tax preparer is money well spent if you're unsure.